Hello, beautiful people. I hope all is well. I hope all is well. It has been a while since I've been on live in the evening, and this is because I have made a very sad transition back to the day job, which is a-okay because it won't last long. So let me tell you about my first day of school. Rough. So you see those like before and after pictures when you send your kids to school and they look all pretty and pristine and their hair's done, and then you pick them up off the bus and then they look crazy. That was me. My curls was popping. My curls was popping today when I went to work. And with the mask on and making sure the kids had what they need, this is the end result. But guess what? It's a-okay. It's a-okay because I am here live with you to share some amazing content this week. So if you are new to my page, my name is Alison. I am a certified dating and relationship coach, and I work with singles to help them find and couples how to keep the partners that they deserve. I usually go live about 2 to 3 times a week so I can share information around dating and relationships. And I'm doing a very special series this week where I have a ton of knowledgeable and amazing guests who are going to talk about the business of love. So the series is called Love and Business because everything is love and something, right? Love and business. And so it was perfectly fitting that we have an amazing guest today. I'm going to go ahead and invite our guest in so that she can introduce herself, especially with this being called Love and Business. Our first guest is probably the most appropriate guest ever. Hello.
Hello.
Can you hear?
I can. Can you guys see me? I was trying to make it home in time, but sometimes it just don't happen.
Sometimes it just don't happen.
It does not happen.
Trust me, I was supposed to get off at 3. I got home at 6. So I understand, and I haven't even started the business. The business is starting now.
The business is starting now. Listen, I get it. We have to do it, but thank God for phones. And yeah, somebody's saying I can't hear with the music. What music?
I don't think
You
I don't
can
think
hear
that's
me
not,
fine?
I can, and I think everybody else can. So we're super good to go.
Oh,
All right,
okay.
I just want to do a quick reintroduction. We have a whole bunch of people who are jumping in. Thank you for joining. We have Jose. Thank you. Detroit podcast, SNATCH by Marie. I am business, bitch. Is in the building. All right, hustle hard, all that. So welcome. If you are new to my page, if you're coming in through Miss Business's page, my name is Allison. I'm a certified dating and relationship coach, and I primarily work with singles to help them find and couples in order to keep the partners that they deserve. So I'm doing this series all week. I have a whole bunch of different guests who are speaking about the business of relationships and the business of love. So I'm so excited to introduce Miss Business 101. And you're going to go ahead and take it away and tell us who you are.
Yes, so for those of you who are coming from Allison's page, I'm Miss Business 101. My name is Shaquana. I go by Miss Business 101 across all platforms. I am a CPA, which is a certified public accountant. I work with small business owners, individuals, just trying to help to navigate the whole side, like the whole tax and business side of things, because a lot of people are not there to help us. So I wanted to be the one to help us, as it relates to taxes and business and and love, right? Because I'm happy we're here talking about this because the things I see on the back end, are crazy as it relates to taxes. And, a lot of people are on the internet and consistently always talking about, how to obtain wealth or how to make money, but no one's really talking about how to actually keep it. So that is extremely important in wealth generation, right? Because every dollar that you give to the IRS is money that you could either be keeping within your family circle or be reinvesting, whether that's in stocks or whether that's in real estate or whether that's inside of your business or inside of your home. So I just wanted to, make taxes cool and just have the conversation about business and taxes. So here we are.
Yes, ma'am. So the first question I have for you is probably one that you get all the time. For newlywed couples, folks who are accustomed to filing as single, head of household, whatever it is, now it's tax time. How do you make a decision as a new couple on how to file?
Yes. So if you are married, you are required to either file married filing joint or married filing separate. Keep in mind, if you are, I'm sorry, your question was specifically for people that are married, right? That
Yes,
tax,
yes.
okay. So you are required to either officially file married filing joint or file married filing separate. So if you're filing married filing joint, keep in mind that's going to breed the most tax benefit, okay, for you. And in most situations, in most scenarios, it's going to breed a better, like a much better benefit as it relates to refunds and the amount of tax credits. However, if you are and you all do decide to file married filing separately, which I will talk about in some instances where people may say, well, why would I even want to file married filing joint? But if you do file married filing joint, keep in mind that's almost as though you're filing single. And a lot of people don't know that. However, a lot of people decide to file married filing separate because their spouse may have some sort of tax debt or
Mm-hmm.
some other tax issues, or they may owe people, or some instances like child support issues where they may say, you know what, I don't want to be a part of it. And what I always notice with couples, there's always one, not always, but when in most cases, there's always one spouse that likes to push the envelope, meaning
Mm-hmm.
that you'll have one spouse that goes exempt for the entire year and the other one who's paying their taxes, and they're like, you know what, I don't want to be a part of that. So you
Mm-hmm.
know what? Let's do married filing separate, because at the end of the day, if you file those taxes together, the reality is you are going to be responsible for
Mm-hmm.
that tax liability. There's no way that you can then go in and say, hey, we signed these taxes, but we're not responsible. I mean, you're like, oh, I'm not responsible, but you were on the taxes with that person, so that tax liability is always going to be associated with you.
Okay, makes sense. Now, you did allude, you were asking for clarity about, are you talking about legally married? So let's talk about that. What does it look like for a couple who own property together, live together, or raising a family together, but not legally married? What are the tax benefits? How should they be filing? What does that look like?
So that's a different situation and scenario. So if you are not legally married, you cannot file that you are legally married. If you are audited by the IRS and you do not have a marriage certificate to provide to them, they will pretty much take back all of those credits that you received, and they will expect their money back with interest. So if you are together and you have a child, most of the time people will decide who's going to take the child and claim head of household, who's going to file single. And what I do with clients is we run scenarios for clients. So let's just say hypothetically you had, let's say a girlfriend, a boyfriend, and they had one child and they have a house. Depending on how that goes, one person may take the house, one person may take the child. It may be beneficial because of credits. Maybe one person takes the house and the child,
Mm-hmm.
depending, it really just depends. And no one situation is the same. As I mentioned, we have some people that will go exempt for the entire year because they're like, listen, I have that tax credit at the end of the year, and they feel that that's going to help them. And so
Mm-hmm.
that's what they'll do. So everybody's scenario is different. So
Mm-hmm.
I highly suggest, like, if you're working with someone, ask them to run a scenario. Hey, if we found, who takes the house, who takes the child? If I
Mm-hmm.
take the child, what does that mean? And let them run you the numbers. Like, we give clients a clear picture. This is what it would be, if you guys filed, this person took the child versus this one took the house. This both take the house and the child. These are your numbers and this is your options, right? Because
Mm-hmm.
I like to operate on matter of fact. So we don't want any hypothetical situations or scenarios. We want to make sure that we are operating off of this is what it is.
Mm-hmm.
And
Mm-hmm.
so that's pretty much like how it should be done, because there's no right or wrong way. If you all have a child together and you all are caring for this child, you can definitely claim the child, but you just want to make sure that both are not claiming the child in the same year. That will cause you to get audited, credits to be disallowed, and it'll become a whole mess.
Okay, good. Good to know. I just want to emphasize you said something that rang true. Oh no, I think we're losing you for a second. Hold on, folks. I think that Shaquana may have gotten a call, and usually that might disrupt the live. Let's see what we can do about that. Okay. So I think that she'll be coming back on as soon as the service improves or the call ends. But King Arthur, I see that you asked a question. Can you come again, please, about the child part? Okay, so when Shaquana is able to get back on, I'll be sure to ask her that question again. But let me see what I can do about inviting her back on. See, that's the nature of the game. When you play on other people's platforms, you got to play by their rules. Let's see. Shaquana, when you get on, just let me know. Put something in the comments, wave your hand so that I can find you and get you back on ASAP. Jose says, good to know. Reigns true. The parent to our daughter can keep the child tax credit. Okay, so she's back. So I'm going to invite you back in. It says Miss Business is unable to join. You know that Instagram, unreliable platform. So I just invited you back on. Hey, yay,
I
you
was
made
there
it.
for so long, and I don't know. I kept requesting it, and it wouldn't allow me to re-request. I like left out and came in, but I don't know how. I don't know what happened. I didn't get a call or anything. It just, I don't know.
That's the nature of the game. It's all good. But
Yeah.
what I was saying right when we cut off, so I don't know, that's the devil that was cutting me off, is that a couple of months ago I made a reel about marriage not being just a piece of paper. And then you made a statement in regard, if you don't have a marriage license, if you don't have that documentation, then there are some things you may not be able to access.
Mm-hmm.
Right?
Yep.
So that's accurate. I'm not just throwing
Yep.
that.
You are not just throwing that out there. At the end of the day, it all, it's a tax play as well, right? Like that you are incentivized for being married. Like even if you look at capital gains and long-term capital gains, if you're single and you hold something long-term, quote me on these exact numbers. But if you're single and you hold something long term up to 30,000, you pay zero tax. If you're married, it's like it's way more than double it. I can't remember. I want to say like 100,000, right? But the idea of what I'm trying to say is that when you're married, there are perks from a tax perspective that you encounter. You get incentivized for dealing with that person every day, all day.
Every day, all
For
day.
paying your I do's.
So, question for you. I'm sure because I know that you are certified to do what you do, which you're going to explain what you do again, across the country, right? So, someone asked about you being a CPA. Can you just define that, like tax
Yes.
preparer versus CPA? Like, what is that all about?
Yes. So I am a certified public accountant, which means that I have to pretty much take exams in order to qualify as a certified public accountant. It is higher than a tax preparer. Tax preparers do not have any requirement or ethic responsibility to you. While as a CPA, I actually hold a license. I'm required to, one, stay on top of new tax codes or new accounting qualifications. I have like standard hours every single year that I have to, that I kind of have to adhere to. So that's pretty much like the main difference, i.e. that's also going to mean in order to become a CPA, you also have to have 1 year of like public accounting experience. So I actually wound up staying in public accounting for about 6.5 years. So that's where a lot of my experience comes from.
Okay.
So yeah, so a lot of my experience comes from corporate, and so I just pretty much, what I did was I took that corporate structure because I didn't really see it in small businesses, and I applied it because um, I applied it. I'm so bad at reading comments and trying to talk. It doesn't work.
Don't read
Um,
it. I got you. I got you.
I'm so bad. So yeah, so I just pretty much took that framework from the corporate perspective and integrated it into my business because it just was needed. Like, a lot of small businesses aren't getting the knowledge and the education, or individuals as well. So I was like, you know what? I have to be that person to help individuals as well as business owners position themselves to save on taxes.
Makes sense. Makes sense. So the comments that you're reading are in regards to getting in contact with you and working with you. We're not at the end, but I do want to address it because it's being asked. So how does one work with you? How do they qualify? How do they schedule? How does all that work?
Okay, so for right now, my calendar is closed through October to personally speak with me. If you all have, sometimes clients will have very, very difficult questions or need to speak with me specifically in order to move forward in the tax process and the business formation process. However, I did have to close my calendar through October because I had to get my business in order. And as you all grow and you have businesses, you will understand. So I did have to close my calendar. However, it does open up in October. That is not available yet on the calendar. If you guys want, you can contact my office. The link to the telephone number to the office, the email address is located in my bio, and you can just reach out and just let them know that you want to schedule a consultation. The reason why it's not on the website is because if people schedule appointments too far out, they tend to forget about them and they tend to waste my time.
Yes.
So I will most likely be opening that up in the beginning of October. So that way, people will remember the consultations and actually attend the call.
Okay, good.
Okay, so yeah.
All right, so I had to address so King Arthur. I think you got everything you needed to know. So let's keep it moving. Now, as you stated, you work with small businesses, larger, mid-sized businesses, individuals. We're talking about couples today. So have you worked with couples who own a business together? And if so, I already know the answer to this. If so, what are some of the mistakes that they're making in their business?
Okay, so some of the mistakes that they are making. One, I feel that there's no communication in terms of delegation. They're married, they decide of an idea, they say, okay, this is what I want to do, but no one actually sits down and say, okay, you're going to handle the administrative tasks, you're going to do this. And then I have seen couples go at it because we do review calls with clients. And I've seen couples go at it because it's like, everyone's on a different page. So I will say still communicate as though that person is not your husband or your wife, because that is extremely important. The second thing is understanding that when you register your business, if you are married, now if you're a couple, you automatically have to file, let's say if you register your business as an LLC and it's two of you, you have to file tax form 1065. And that pretty much allows you to file your partnership return. Each partner, you and your significant other, will receive what's called a K-1. Each of you individually will report that income into your personal taxes. Now, if you're married, when you're registering your for your tax ID, you have two options. One is you can be seen as a single member LLC, or you can be seen as a multi-member LLC. But it's important that you make that distinguishing factor and you file your taxes in compliance with whatever you choose. So
Yes.
now, if we're talking about how those taxes look, when you file, if you all say, you know what, we want to just be seen as one person, we don't want to be seen as two separate people, what happens is you have your personal taxes that you're filing together, and you go single member route. You'll have your personal taxes that you're filing together, and what happens is you all will just file Schedule C. So that Schedule C will say, the name of your business, and then you all will list you'll get all your income and your expenses listed there. And
Mm-hmm.
that's how that shows up. If you decide to do and be recognized as a 2+ member LLC, which I usually recommend, and I'll tell you why after, but I
Mm-hmm.
usually recommend that you do the 2+ member LLC, so that way you can file that 1065, and then each of you will receive a K1. And so a K1 is very similar to, let's say, a W2, where it's just showing how much money from the business that you've generated. So
Mm-hmm.
each of you will then report, if you're filing your taxes jointly, you still would just take both of those K1s and report it inside of your taxes.
Mm-hmm.
So that's pretty much how that works. Now, why I suggest couples to do 2+ member LLC and be recognized as two individuals is because, let's say, if, like, I have this scenario with the client right now. One client, even though they're married, one client is trying to go off and purchase a home.
Okay.
And so what happens when you are going for a home and trying to qualify, they look at your income separately, right? If you're not going into the other home with your husband, then his income doesn't matter. The
Right.
only income that matters is your income. So what happens is, if they can't differentiate what's your income versus what's your husband's income, it just becomes a big mess. And then
Mm.
you have to try to go through extra extremities to try to verify that income, because technically what it's saying is that income belongs to both of you.
Right.
So that's why I do suggest that it is a 2+ member versus being seen as one collective person.
Makes sense. Makes sense. I just want to let everyone know, if you have any questions, please go ahead and drop it in the question queue. We will be taking questions in just a few minutes, but just to keep everything organized, please go ahead and drop those questions in the question queue. And we are at about 2/3 in. I just wanted to reintroduce, for anyone who is joining the live stream, who I am and who we're speaking to today. My name is Alison. I'm a certified dating and relationship coach. I'm doing a series this week called Love and Business. I'll be interviewing a couple of different folks who are involved in business in some form or fashion. And it's just perfectly fitting that we have Miss Business, right? 101 here this evening, who's talking to us about the pros and cons of taxes, filing your taxes as a couple, filing your taxes as a legally married couple, two different things, and running that business together. Okay, Miss Business, just one more time for those who are just joining. Who are you? What do you do?
My name is Shaquana. I go by Miss Business. I am a certified public accountant, which is a CPA. I work with individuals as well as small business owners to help you all navigate taxes.
Amazing, amazing. Okay, so my next question to you is in regards to, again, the couples who run businesses together. I know you said the number one issue you're hearing is poor communication. They're not delegating appropriately. No one knows who's responsible for what. There may be some tension in regards to who's responsible for what and who's doing more work and who's not spending right and all that kind of stuff. What are some of the positive examples that you've seen in a couple? So a couple that has a business together, what do you see comes from that? Or what are some of the characteristics that's associated to couples who are successful in business together?
I think on the flip side of it, I also think it's communication and knowing your partner's strengths. I have some couples, male and female, and I've heard it, on opposite sides, where they'll say, you know what, they're better at dealing with the finances. So I leave the finances up to them. I'm bad at it. I'm really good at, let's say, driving trucks. So I deal with everything relating to driving trucks. I don't want to deal with anything that relates to it. You know what? Let them deal with it, and I trust them. Whatever they say, I'm good. And I honestly, I love when couples come to me like that, because I'm like, wow, that's like a sense of trust
Mm,
that you really have in your partner, because no matter what this tax liability says or what this refund says, you've trusted that your partner has asked all the questions. They chose me. There's even been instances where people will say, my wife told me to work with you, so I'm working with you.
mm-hmm,
And they trust their partner that much to just to trust them to get it done. And
mm-hmm,
I think for me, that just shows so many like great attributes. Like, one, you have this partner that you said I do to, you trust them to get it done, and then you're doing it without judgment, without needing to micromanage them or feel
Mm-hmm.
that they're not going to get it done. And so I think for me, just knowing your strengths and then allowing that your partner to really do what they need to do is key. And so I that's like my favorite, my most favorite part, when people call me and they're like, listen, my wife or my husband says, so yeah, this what we're doing. And
So
I'm
I
like,
hope that
okay.
you guys have heard what she said. So what Shaquana just said is that what she finds when working with couples, and she's worked with a lot, right?
A lot.
Is
Yes.
that when you are in business together, when there is trust there, when you are working with the person in regards to what their strengths and or weaknesses are, and then you take up for each other in that regard, that's when they have the most success. And guess what? That is extremely in alignment with a normal relationship, not a working relationship, but a romantic one. When there is trust in that relationship, you are going to have more success. When you are mindful of someone's strengths or weaknesses and you play up on those things and you step up where the other person needs you, then you're going to have more success. So if you're talking about a platonic relationship, a romantic relationship, or a business partnership, it's the same core values, no matter what. All right,
Mm-hmm.
so I know that you got to run, so we have about 3 questions in the queue. Let's take them, and then we are going to keep it moving. So one question is, how do you recommend structuring a business with your minor child? How do you recommend structuring your business with your minor child?
So honestly, if you have a child, you just need to be on the paperwork as well. I can't necessarily say, like, the structure doesn't change just because they're a child. The structure is mainly based upon what the industry is and what your income volume looks like. Those are the things that matters.
Mm.
Um, there's a few things to consider, and what I talk to my clients about, especially during tax planning time, where we're saying, okay, well, does it make sense for the child to take some of the income? Like, no one talks about that, right? Like, kids are taxed at a lower tax rate, right, up to a certain amount, or even zero if it's up to like $12,500, right? So a lot of people always just talk about how to pay your kids for free, but then putting them in the business as well is another way to kind of save on taxes and allocate that out. So, the option of an LLC, you can, I just kind of give high level. If you're in real estate, I would suggest doing an LLC. If you're just getting started and you don't know what your income levels are going to be, I would say LLC. And the reason why I say LLC is because it's a little bit more flexible,
Mm-hmm.
just in terms of what where you can go. So you can start out as an LLC, but then go to an S corp, or start out as an LLC or then go to a corporation,
Mm-hmm.
right? So kind of depending on how much money you're making or what that business is, it may make sense. So that would really be my advice. I wouldn't, there's no specific structure. It really just depends. But if you're just starting out, go LLC.
Okay. Our next question is, can you incorporate a nonprofit organization using a virtual address? If so, is it reputable? Can you incorporate a nonprofit organization using a virtual address? If so, is it reputable?
Okay, yes. So you can, and most people will do that. Opposed to, actually, that's how I started. Instead of using my home address, I use a virtual address. So to that question, yes, you can use a virtual address. No one's not gonna tell you that that isn't your business address. As long as, for the most part, when I started my business, I had someone I worked with, Opus, and they answer the phone. Like, when they call, it's like, hi, Brooks Alliance. And that was when I first started. Like, I only had, like, and they would transfer the call to my cell phone, but it was, it helped because, one, you don't want to keep giving people your cell phone. It just doesn't look professional. And then I can also accept mail there. So if I needed to send mail there, I was able to send mail there as well.
Alrighty. And do you know of any reputable companies with a virtual address? Any recommendations?
Yes, so I used Opus, but there's also Regis. So Regis is very popular, as well as Opus.
Okay. There was a question in regards to financing your car under your business name. And I feel like, as someone who pays attention to your content, I've heard this 1,000 times. So do you want to go through it, or do you want to just
I'll go
recommend we
through
go to your
it.
page?
No. I'll go through it. It's fine. They're here now. So putting a car in your business name, for those of you who don't know, I actually put my car in my business name. It was a video, it went viral. So that's why Allison is like, I've seen this. However, to the process of putting your vehicle in your business name, it depends on the lender in terms of what they are looking for. So you would have to get specifics, but what I can tell you is the things that I know they're going to ask you for. The quantity really depends. The quantity really depends on the, based on the lender. So the things you want to make sure that you're doing is registering your business. The second thing you want to do is make sure that when you are collecting payments, that all of your income and all of your expenses are coming out of that business bank account. You have to be able to show them that you're making money. Keep in mind, these are banks. The only thing they care about is that you are making money and that you can pay them back. Okay, so once you have that, another thing that is very important are financial statements. Financial statements are extremely important, as well as taxes. So let's talk about those two things. As it relates to your taxes, every lender is going to be different. I've had some clients, when I went, they only asked me for 1 year of taxes. I had some clients where they've asked for 2 years of taxes. Other clients, they've asked for 3 years of taxes. Never really more than that. I've never seen them ask for more than 3 years of taxes. They do this because they want to see. Your taxes is always going to tell them the story that they want to know. What's your net number? How much money are you bringing home? Can you actually afford this lease or this finance that you're trying to obtain on this vehicle? So then from there, in terms of financial statements, the financial statements pretty much usually fills in the gap after that tax period to that current date. So let's just say hypothetically you're trying to get a vehicle today, and the last time that you filed taxes was for the 2020 tax period. So because of the 2020 tax period, they're saying, all right, well, we know how much money you made in 2020, but what about how much money you made in 2021?
Right.
Are you still bringing in this money? So they're going to ask you for financial statements, so the profit and loss statement, balance sheet, as well as getting that, what am I saying? Getting your taxes and the financial statements, the profit and loss, and the balance sheet. So those things are pretty much what you need to put in your vehicle name. Now, what it means from a tax perspective, if your vehicle is over 6,000 pounds, you can write off the entire thing. Meaning that if your vehicle costs $100,000 and you needed that $100,000 tax write-off in that year, you can write it off. Keep in mind, there are still perks, because no one talks about this or they just skip over it. There are still perks if your vehicle is under 6,000 pounds. You can still write off a great amount. You can still write off a great amount within that year, right? You can depreciate your vehicle and write it off over a period of time. So that's extremely important to note as well. You get to write off the gas, the tolls, the insurance, everything, because technically that vehicle belongs to your business, right? So that's important. I feel like people skip over that all the time, but that's how you do it. That's the perk of it. If you lease a vehicle, you can write off the lease payments, every single dollar of that lease payment. If you decide to finance the vehicle, meaning that you own the vehicle, that means that you can write it off over a period of time, right? So and if you purchase a vehicle under your business, that technically means that's an asset of your business. So assets can be depreciated, meaning that you write off a little bit over every single year. And then, of course, depending on how much the vehicle is, that's how much you're able to write off on your taxes and use it as, a tax write-off.
Understood. One more question, even though, like I say, I pay attention, EYL, all day, every day. Now, what if your career, your business does not require any kind of driving? What I do is dating and relationship coaching. I use the internet and my cell phone. I don't have to drive anywhere ever. So is there any conversation or any analysis about what the career, the business, the thing is in relationship to the vehicle?
So technically you do have to go out. You have to network. You have to come and see me at events sometimes.
Indeed.
You have to go out, right? So it's more about being able to say how you can use your vehicle. Ideally, in order for an expense to be able to be written off in your business, it has to be ordinary and necessary, meaning that ordinarily in your field, you will need a vehicle, and then necessary just meaning that you necessarily needed it. However, if you explain why you needed it, that's why you needed it. And of course, if you're getting it under your business name, it's undeniably a business expense.
Right.
Because it belongs to your business. It's not as though it belonged to you and then you're trying to figure out like, oh man, what percentage am I using it for my business? It belongs to your business. So you're checking a couple boxes. So I don't think that you will have a problem.
Understood. I have some comments. One of them is from my husband for Wellington Event Rentals. He has a truck, insinuating that we need to purchase a truck under our business name to transport all this stuff.
Yes.
So he's going to get it when we're done with this live, believe you me. But you know what? Actually, I think this is a perfect opportunity for us to wrap up. So Shaquana, do you have anything you'd like to say? Any last thoughts, any last words in regards to dating, relationships, business, and all that good stuff?
Yes. So my recommendation to everyone would be, before you get married, understand your husband's tax liability situation. I have a lot of people that get married and then they're like, oh, he had $60,000 of tax liability and now they're garnishing my check. That happens a lot, and more oftentimes than not. And so you really just have to understand your partner's finances and understand where they are, because I think that is extremely important. And then also understand what they're doing throughout the year, because as I mentioned earlier, you have people that are real life, like living crazy, like not paying any taxes throughout the year, and then at the end of the year the wife's entire tax refund is going to compensate for the husband. I'm sorry to put it that way, but most of the time it's the guys that just be wilding out. They be like, no, I need my money. So it really is a situation where I think you just have to understand your partner and understand where they are financially, so that way you can, make the best decision for you. Because I've also seen a lot of people who have come to me after they were divorced and they're like, I'm still dealing with his tax liability. So it's real. The IRS do not care if you get divorced. While you were married, you are responsible for those taxes if you file joint.
Yep, absolutely. Well said. On that note, thank you so much for joining us. I really appreciate your time. And I hope that you turn in for the rest of the week, because tomorrow I'm going to have Emerald on. We're going to talk about branding as a couple and some other amazing guests in regards to love and business.
I'll be tuned in.
All righty. Have a good one.
Same time, 7 o'clock?
7 o'clock. Yes, ma'am.
All right. I'll be there.
All right. Thank you. Thank you so much for joining, and thank you everyone else. Goodbye.
Bye.